All right, what's going on, everybody? Stocks by the numbers. Welcome back. Now we're recording this for the second time now, since apparently the mic decided not to work. So I'm going to try to do this even quicker now because we just lost 30-40 minutes. But name of the company we're looking at, HIMS and Hers Health Incorporated, ticker symbol HIMS, listed here on the New York Stock Exchange. Stock right now about 18 and 3/4, still up a little over 4 points here, 28.5% on the day. Stock exploded up to above 20, hitting new highs here of 20.11 a share. And I said, in my opinion, all the way back here last quarter, when we looked at the company come out with those numbers, stock was like $11.5, $12 a share. I said, in my opinion, not only should this company continue to climb higher, but overall, in my opinion, this is easily, if not a 20, potentially I think a $25 stock. I said in Discord, and I tweeted out on X, I said that was my opinion, that was my price target. And what happens today, the company comes out with apparently an injectable weight loss drug. Boom, stock pops 30%, hits new highs. And I wanted to go over just a couple of the numbers and look at the company real quick, but overall I just want to reiterate that this entire time that it was pulling back didn't make sense. Why isn't it climbing? Oh, they beat earnings again. How come we didn't explode up to $20 a share? In my opinion, I said it once, I'll say it again till I'm blue in the face. In my eyes, that is the wrong way to look at these situations. If you know, quote unquote, if you know that we have a winner here and 6, 12, 18 months down the road, the stock is going to be in a significantly better place, then in my opinion, when you have these consolidation periods or the stock doesn't move when it should or it goes down when it's supposed to go up, in my opinion, you should be viewing that as a massive buying opportunity. I said it once, I'll say it again, just like with stocks like Fubo down at $1 and then it ran up to like 380 for us when we first looked at it, which happened twice on its own merits. I know people keep asking about Fubo, I don't want to get into it, but the stock almost got to $4 on its own merits before the lawsuit happened. Stock right now, all you can eat, down at $1.30 in my opinion. But same thing happened with SoundHound. SoundHound sitting at $1.80, $2, $2.28. Everyone wonders what the heck's going on. I thought we have good news. What's going on? And then boom, all of a sudden, the stock explodes. Consistent positive catalyst after consistent positive catalyst, coming out, beating earnings, talking about new clients, bigger and better things. All of a sudden, the stock explodes up to $10. Everyone says the same thing. What do they say? I wish I knew. I wish I bought more. That is the point I'm trying to make. When we quote unquote know that we have a potential long-term winner, you should not be worried about the short-term volatility. You have to deal with the short-term volatility to get the long-term growth. At any time we have a stock that runs from 12 to 17 after we look at it and they post a stellar quarter here, if we start to pull back, even back to or below where we were, you should view that as an opportunity to buy more shares, accumulate shares, build a position, and then boom, all of a sudden we pop up to 20. This company recently reported earnings. Look at this. EPS side has been doing phenomenally well. We have a market cap here of only about $4 billion. Look at this here. 2 quarters ago, they thought they were still going to lose 2 cents a share. They came out, they made 1 cent a share. Last quarter, they thought they were going to make 1 cent. Boom, they made 5 cents. And look at that revenue. Estimates jumped up to over 270 million. The company posts 278 million and beats by almost 8 million there, almost 3%. And the stock has been on the up and up since then. And then, of course, we had the positive big news catalyst come out today, and boom, that popped the stock up. But if you look at the annual revenue to close out 2023, first of all, net margin percentage completely exploded here. And as you see, 2021, almost minus 40%, the company was operating with a negative net margin. Now to close out 23, only minus 2%. And in my opinion, based on the future growth that is forecasted in the business overall and in the future revenue potentially coming in over the next couple of quarters, in my opinion, they have a very, very good chance to close out 24 net margin positive. But we can see on the annual side here, 870, we have a market cap 4 billion. We're trading technically less than 5 times annual revenue. And I know we look at a lot of companies and sometimes they're trading like 2, 2.5, 3, 3.5 times annual revenue. This one's trading 5 times annual revenue. However, it has been immensely significant. Excuse me. It has been immensely consistent with these earnings coming out. And in my opinion, when we look at other companies, we can't just look at the tech sector. This is the point I try to make also. There are a lot of up-and-comers, a lot of nice growers underneath the radar that, in my opinion, are absolutely worth your time, energy, and attention. And something like HIMS here, again, based on where they come from and how they're growing, for them to be this consistent and be and be trading at about 5 times annual revenue, in my opinion, I still kind of view it as a discount, honestly. I truly do. I still stand by my personal analysis that this should easily be a $25 stock. I mean, a lot of people thought 20 would be a far ways away. Boom, all it takes is one announcement. And that's why we can potentially maybe pause for a couple of days or throughout the week here, because the RSI did explode. However, again, on the flip side, the point I made in the original video, which of course the audio didn't pick up, it was actually a really good video. I had a good flow going. But long story short, what I was kind of explaining to you guys is, see something like the RSI up here now technically above the benchmark. In my opinion, it's a situation like this where now the fundamentals actually trump the technicals. And I know all my traders obviously are seething after hearing something like that. But as much as we want to trade and as much as we want to blow the technicals, at the end of the day, numbers do not lie. And if you have a company that is significantly undervalued but is growing and is stable in the numbers and it's not moving, it doesn't make sense, well then I will redirect you back to a small stock known as Super Microcomputer, ticker symbol SMCI, which I showed you in a 5-year consolidation period and is now one of the hottest names on the street that everyone and their brother is trying to buy shares at a deep discount or potentially trade it like an Nvidia with these swings now of 50, 80, 100 points a day so that they can make a killing on the option side. So now it's a player, right? All of these years later, now it's a player. So imagine I take you back to when it wasn't moving, it was going down, consolidating, it didn't make any sense. Why isn't this stock up? And now, boom, the freaking stock's at $1,000 a share, wherever it is. So again, with something like HIMS, dropping down, not making sense, they just missed earnings and hit highs. How did we give these highs back? Or, oh, they reported earnings over here, but the stock didn't move like I thought. Or, oh, look, it went up and then went back down. What's wrong with him? There is nothing wrong with HIMS. What is wrong, in my opinion, is your mentality and how you're looking at the situation. And that's why I always say, when positive news comes out and the stock runs, if you bought it here at 11.12, you understand and you're excited why it's up at 16.17 a share. And if we still like it at 16.17, thinking it's going to go to 20, then if it pulls back down to 13, 12, 11, guess what? If I liked it at 16.17, I should be in love with it down here at $12, $11 a share. And it's situations like this is why, again, you just saw in real time over the last couple of months, this is why I always say you have to deal with the short-term volatility to get to that long-term growth. And this whole time should be viewed as an opportunity. That's the point I'm trying to drive home. Just like we saw with Fubo again, from $1 ran up to almost $4 on its own merits, and then SoundHound again, $2.25, $2.40. Next thing we know, the stock's at $6. Next thing we know, the stock's at $10. And everyone always says the same thing. I knew it was a winner, I knew it would move, and I should have bought more. Well, guess what? Now it's too freaking late. So do yourself a favor. Stop sitting on your hands. Stop forgetting what the strategy is. Stop overthinking the situation. Lift up your skirt, grab your balls, accumulate shares, build a position, and wait for the explosion. And again, I will say it until I am blue in the face. And for the record, I know everyone, because basically everyone else on YouTube makes videos and pumps up stocks that they own, or they trash stocks that they don't like, or they don't own, or stocks that they own puts on. Full disclosure, I do not have a position in HIMS, and I am telling you right now, in my opinion, this is easily a $25, if not a $30 stock, and we already hit 20 here off of this news. Let's switch over to stock charts real quick. I'll let you go. Again, RSI up here at 80, stock still staying up. Markets slightly began to sell off, so that could potentially be affecting the situation. But I don't think the RSI is the reason why, right? So that's the point I'm trying to make. With this new catalyst that came out, in my eyes, the fundamentals now trump the technicals. And if you're sitting here off of this news saying, oh, the RSI is at 79, I'm going to short it, in my opinion, you're an absolute fool. But of course, it remains to be seen, and if you want to catch a quick scalp play or something, obviously it's entirely your own prerogative. I wish everyone watching makes $1 million. I wish all of you the best of luck. But as you can see here, MACD flying straight up here, beelining to the sky. RSI at 80, doesn't matter. Top resistance level 1748, broke right through it. We're looking at the daily, by the way. And we can see here, going back to April, we can see this top resistance level looks like about 1960. Stock hit 2011, though, and then pulled back. So we continued above even previous resistance levels, which is why I'm saying, in my opinion, yeah, we may pause here for a day or two, maybe even the remainder of the week, who knows. But after that, in my opinion, it really should take that next leg higher, should get back up above 20, and should be hitting even higher 52-week highs. RSI here on the weekly up here at 72, but again, as you see, let me take this off, it's annoying. But as you see here, last time, going 2 quarters ago, coming off those earnings, the stock rose again from, like 10 up to 17, broke through 2 resistance levels, and the RSI the entire time was above that benchmark of 70, hitting about 85 at one point. So that's why, again, in my opinion, the RSI, or even what the MACD is doing, really, it doesn't really have bearing on this situation. And that's just the way I'm looking at it. But we can see the MACD recently crossed to the upside. Obviously, we have this big explosion. That helps. But we can see top resistance level here on the weekly, 1565. We're well above that. Let's look at some previous resistance levels. Back here in 1953, right? The other resistance we looked at on the daily was 1960, so we got above both of them. And we come back all the way here to 21, and you can see maybe about 20 and a half, maybe 2040, 20 and a half, we'll call it. Stock hit 2011. So in my opinion, again, if it takes a day or two to calm down, fine. But it should probably go back to 20 and a half and then potentially pause from there. But overall, in my opinion, I like HIMS, and I think it's worth even more than it currently is right now, even after this big pop. And the debt jumped up to 11.8 million, and it was down here at 4 or 5 million, and it did run up the last couple of quarters. But again, I mean, we're talking about a $5 million increase with a $4 billion stock. I mean, technically a drop in the bucket, in my opinion. Look at the cash, basically doubled here, going from 50 million up to 96 2 quarters ago, 105 and a quarter as of last quarter. Assets outweighing liabilities. The revenue consistently keeps increasing. We look at the balance sheet here. The equity continues to increase. The book value down here at $1.61. But again, if there is a stock that should be trading 10, 12 times book value, if there is a stock that should be trading 6, 7, 10 times annual revenue, in my opinion, it should be a stock like HIMS that is consistently growing like a weed over the quarters, over the years, consistently beating estimates. Again, just went EPS negative to positive. In my opinion, it really does look good across the board. Price to cash flow sitting here at 37, but we were a little bit higher than that. We're only trading 3.5 times sales. That's not too crazy. 9 times book value. Again, in my opinion, I think it's justified. And we look at a lot of other stocks that, in my eyes, are kind of crappy, but somehow they have higher enterprise values. And that's why I laugh, because now something like HIMS enterprise value is roughly 25% lower than where the stock is currently trading. However, it probably didn't take into account the new catalyst that hit today. Look at our return percentages. They were all minus 20+%. Now, 7, 8 quarters later, we're basically break even. Our gross margin percentage, this is the first dip that we've seen, but it's still, sitting here about 68.5%. Technically, it's the lowest it's been, but for all we know, this could have been a speed bump of a quarter. So, in my opinion, I wouldn't read into it. And even if the company maintains high 60s, low 70s gross margin percentage, in my opinion, obviously it could be worse. Look at the operating margin. Was minus double digits, gets up here to minus 3%, 4%. Boom, now it's positive 3.7%. EBITDA minus double digits, minus single digits, now sitting here at almost positive 5%. Net margin, minus double digits, minus single digits, positive 0.5% as of last quarter, 4%. Look at the inventory. We have some slight dips, but now we're back up here, 8.51. That's the highest it's been going back the last 7 quarters. Asset turnover has grown from 1.11 up to 2.33. That's more than 100% growth here in asset turnover over the last 7 quarters. Asset turnover, the amount of revenue the company is generating off of said assets on its balance sheet. They're doing over 100% more in revenue than they were with even more assets on their balance sheet. And the liabilities went up as well. But again, overall, in my opinion, just looking absolutely phenomenal. Debt ratio slightly increased, but again, the debt barely moved in my eyes. I really don't view that as a red flag. 5 beats of the last 8 quarters on the EPS side. Revenue has not missed over the last 8 quarters. We switch over annually. Revenue has not missed. This is what I mean. If a company is going to trade at higher multiples and higher ratios like price to book, revenue to market cap comparisons, if there is a stock that should be trading above its peers, in my opinion, it should be a stock like HIMS that is consistently beating these estimates. And also, look, moving forward here, company forecasting $295 million in revenue now for Q2 at 24, jumping up to almost 315, over 332, almost 350 million for Q1 going into 2025. So we're expecting continued growth here and throughout the years. Look at this, just growing at about 20-25% year over year. That is nothing short of spectacular. And you can see 872 million, expecting 1.22 billion. That's about a 50% growth here from 23 to 24. And then we go from 24 to 25. We're expecting still about 25% growth up to about 1.5. Then we're expecting still about 20% growth here, going from 1.5 to 1.8. Then we're expecting, looks like about 16-17% growth here year over year, still roughly 300 million, and getting us from 1.8 up to 2.1 billion. So I'm going to tell you right now, if this stock does do this, you can possibly turn around in about 3 or 4 years. We could be looking at a $50 to $60 stock. I'm going to tell you that much right now. So if we turn around in 2026 and this stock is at like 52.5, and everyone looks back here and says, wow, look, it was 8, it was 11, I should have bought it. Again, at least we'll be on record. But I don't want to beat it to death, and we'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain, but I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Congratulations to all HIMS shareholders. Well done, guys.